Big changes have come to the Brother Man's portfolio, and I'll tell you exactly what they are. Hi, I'm John McNeil. This is the Invest Strong Network. Welcome. In the past few days, I have come to a rather unfortunate place. After examining everything very closely, I have come to the conclusion that it would not be wise to make any further investments of any kind for the rest of 2020. And this moratorium on new investments may in fact drag on until next year. Let me tell you why. Okay, we're familiar with obviously everything that's going on with the medical crises and whatnot. And although the current administration in Washington seems to have already moved beyond, the medical crisis, the reality is this thing is really only in its infancy, and it will get worse. In fact, it will get much worse. And the horrific pain that has been inflicted on the American economy will get worse and become more permanent. Now, one can expect that, but the financial markets, i.e. the stock and bond markets in particular, have actually held up rather impressively through the after the initial monster sell-off. But that's a head fake. They're being artificially inflated by actions of the Federal Reserve. Spoke about that in previous videos. And there will come a time when the Fed will just no longer be able to support this thing. And we have an administration in Washington that, in my opinion, they are making this thing worse than it has to be. They're dragging it out far longer than it has to be drug out. The markets, all of the markets, real estate, bond, stock markets, all of them have become so opaque because of what the administration and Congress and the Federal Reserve are doing, that I just feel as if I can't invest in this. No. And it's all going to end very, very badly at some point. Now, as I mentioned in previous vids, there are some very good companies out there to invest in, stock-wise anyway. But the problem is, even if you are extremely selective and choose only the highest quality stocks to invest in, when the market gets hit, everything is going to be dragged down with it. And that's why I feel it would be wise to make no further stock investments for the rest of 2020. Bond investments, well, I spoke in previous videos about what the Federal Reserve is doing to artificially inflate the debt markets. Now, they will either have to continue to print money to do this, which, as I mentioned previously, will be inflationary at some point, or they may have to withdraw their support for the debt market and then watch the bond markets come crashing down. And they will come crashing down, assured. Right now, corporate debt is being purchased by the Federal Reserve in enormous numbers. That's keeping the market buoyant, but that cannot go on forever. Although the Fed says that they have unlimited resources, no. Even if they do have unlimited resources, I'm not buying it, right? If the market cannot stand on its own weight, you do not want to invest in it. You take my word. All right. The municipal bond markets, these state and local governments, I've mentioned it in a previous video, they are just being slapped like crazy by this medical crisis. The loss of revenue really won't be felt in its full intensity until next year and the year after. And unless the federal government Congress, president, come up with trillions of additional dollars to bail out these state and local governments, their bonds are beginning to smell mighty fishy right about now, right? So municipal bond purchases, no. But wait, what about real estate? I mean, I mentioned in a previous video that I invest in crowdfunding real estate through this platform called Ground Floor. Well, Ground Floor is actually making this very tempting because in addition to their listed expected returns, which most of them are in double digits, they're adding an additional 3.5%, 4% kicker on top of that if one continues to invest at this moment, right? Is that enough to pull me in? Well, it's tempting, but no, can't do it. The real estate markets are very precarious with an unemployment rate that'll be north of 20% very, very soon. The real estate market is going to get killed, right? And you don't want to have your money in investment properties of any kind when that happens. But wait, what about the peer-to-peer lending through Lending Club? What about that? Well, as I've mentioned in previous videos, obviously with unemployment soaring and continuing to soar, it makes no sense whatsoever to extend loans to through the peer-to-peer lending platform because defaults will go up. Now, I'll be the first to admit that has not happened yet, at least not in my peer-to-peer lending portfolio, but get the strong feeling that eventually that will happen. But wait, there's cryptocurrency. What about this cryptocurrency? Bitcoin. No, Bitcoin it's too opaque. I personally don't understand it, and it's too volatile. I personally don't see how, if other asset classes are collapsing, I don't know what would keep Bitcoin buoyant while everything else is collapsing. No, thank you. But wait, there are precious metals, gold, silver, etc. No, precious metals do not pay dividends. And again, just like with cryptocurrency, I personally don't understand what would keep those markets buoyant when other asset classes will come crashing down due to a lack of demand, right? So as of right now, and we're in middle May 2020, there's just no way I could make any further investments really for the balance of this year. Now, what could change my mind? Well, obviously, a change on the ground, right? Well, if a cure or vaccine is discovered for the medical crisis, why, that changes everything. That allows the economy to reopen in full and for a kind of even footing to be reestablished. And that would make me more confident in investing. The Federal Reserve could begin to unwind some of its programs. Now, carefully unwind, and if the markets can remain buoyant as the Federal Reserve unwind the programs, then that would give me confidence to begin investing again. But I think perhaps the biggest game changer would be a new administration in Washington, right? Because right now, I personally have absolutely no confidence in this Trump administration. No way. And as long as they are there, there's just really no way I can invest in anything related to this country and its financial structure. No, just can't do it. We need better leadership, right? Maybe I'm quite confident that that'll be coming in November. So, once we make it through the election, I think we'll be moving in a positive direction. And then, things can get back on an even footing, and I would feel just much more confident about investing in all of the asset classes once there's, shall we say, a new aroma in Washington, right? So those are my thoughts. Let me know what you think. Usually I don't get involved in, political things, and I'm not really even doing it this time. It's just that we're talking about the status of the financial markets. And the financial markets are influenced by policy that comes out of Washington. And really, that policy has been wanting, and that's putting it generously, right? So let me know what you think. I'd appreciate it. Smash the like button. I always appreciate that. Leave a comment. I read them all. I'll respond, right? Subscribe! Please subscribe. I beg of you to subscribe. All right. So thank you much and good luck.